For almost the entire year, Ethereum was just on a downtrend. This is ETH relative to Bitcoin. But now suddenly we see a breakout. Where is this relative strength of Ethereum coming from? And do we have potentially an opportunity here? Here's something fascinating. The ETFs, so the funds on Wall Street, don't actually hold that much Bitcoin or that much Ethereum. It's only roughly 3% of each. Yet they've got a massive impact on the price. So we see how much of Bitcoin supply is held in the Bitcoin ETF over time. And we see how much of Ethereum supply is held in the ETH ETF over time. Both numbers peaked in October of last year, and that's also when the prices tended to decline. Even the ratio between those two ETF flows explains the relative price development. The bar chart in the background compares. Do we see more Bitcoin inflows in a given month or more Ethereum inflows in a given month? Again, compared to the circulating supply of each. So of course, Bitcoin is larger than Ethereum. So for it to see 1 percentage point of supply acquisition, there need to be much more US dollar movements. We are not comparing US dollar movements. We are comparing relative supply absorption. And under that metric, we see very well when Ethereum or when Bitcoin outperforms. When there is mainly Ethereum acquisition, we see ETH doing better than BTC. When there's mainly Bitcoin acquisition, we see that Ethereum is doing worse compared to Bitcoin. In the last 2 months, we have seen more supply being acquired on the ETH side than on the Bitcoin side, and so Ethereum outperforms. Again, that's just relatively speaking. So we didn't even see that many changes in Bitcoin's supply acquisition, just a bit of additional purchases through the Ethereum ETF. And again, I find the connection here very surprising because in the end, Wall Street only holds roughly 3% of the supply. What's happening with the remaining 97%? Why can we explain Bitcoin's and Ethereum's price development with just 3% of the supply? Now there's an important caveat here, because while those movements do work on the smaller timescales, they don't necessarily work on the bigger timescales, because from July 2024 to July 2026, we saw in aggregate more Ethereum getting acquired than Bitcoin. Again, relative to the total circulating supply. The rate of acquisition for ETH was higher. Bitcoin started at a higher level. Yet Ethereum over those 2 years in aggregate underperformed Bitcoin. In the smaller timescales, so just a few months, the connection is strong. On the larger timescales, so 2 years, the connection does not exist. Otherwise, we would expect Ethereum to long-term Ethereum to have outperformed over the last 2 years, which clearly it didn't. But now we are seeing that breakout, and it's happening in line with Ethereum getting acquired faster than Bitcoin. And unfortunately, the momentum around Bitcoin is unlikely going to change because Michael Saylor's treasury company for Bitcoin, called Strategy, continues to sell Bitcoin. Not a lot of Bitcoin, but the selling is consistent. So when the largest institutional holder of Bitcoin is not able to buy but is selling, that sentiment flows over to other market participants as well. And that might be contributing towards the increasing gap between the Bitcoin and Ethereum ETF flows. And so there's a real chance that the long-term trend in Bitcoin's dominance will change. This here is Bitcoin's market cap relative to the rest of the crypto space, excluding the stablecoins. So this is not BTC.D, so Bitcoin dominance. This is Bitcoin's dominance excluding the stablecoins. This is a more clean chart, not just conceptually, but even visually, as in the bottoms and the tops align a bit better than on the pure dominance chart. But if this trend continues, then the stablecoin adjusted Bitcoin dominance cannot rise. Now, if we take the long-term average Bitcoin dominance, then Bitcoin could underperform the rest of the market by close to 15% from here to get back to that equilibrium. And that would of course also translate into Ethereum outperforming Bitcoin. Now, how does Ethereum relate to all of this? Check out this here. This is the Ethereum market cap in green and the altcoin market cap in blue. The two tend to move in sync. This high correlation is no coincidence. It is baked into the ecosystem because a lot of altcoins are traded directly versus Ethereum, not versus the US dollar. So the altcoins are actually priced in ETH, not priced in US dollars. When Ethereum goes up by 10%, and those altcoins that trade versus ETH automatically go up 10% as well, without a single trade happening, just because it's the ratio between the altcoins and Ethereum that determine the US dollar price. Now this is the Ethereum chain, but it looks very similar for layer 2s that are derived from Ethereum, like the base chain or like Arbitrum, etc. And this is then how Ethereum trades relative to the altcoins in a quite consistent range. This is a chart that starts in 2018. At the peak, Ethereum is 2.4 times larger in market cap than the altcoins. At the bottom, it's only 90% of the altcoins. The average is 1.5 times. So ETH's market cap is 1.5 times larger than the altcoins. Altcoins being measured via the others metric. So that's the altcoins that are not in the top 10. And currently we are very close to the equilibrium. Ethereum might be slightly undervalued versus the alts by roughly 6.3%. But in the end, if all of those theses come true and Ethereum outperforms Bitcoin and this breakout continues, then that will not just have an impact on ETH, it will have an impact on the altcoins equally, because Ethereum and the altcoins are pretty much at an equilibrium now. Down below in the pinned comments, there's a link to this website, How to Read the Market Cycles. This is a free PDF cheat sheet that you can download completely for free. You can either scan this QR code if you have Telegram on your phone, or you click the link below and then click on this button to get the PDF via Telegram. You can also input your email over here, and then you get that PDF sent to your email. Again, completely free. No payment is required. No credit card is required. It's my little thank you to you for watching the video to the end. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time. Cheers.